Hey, what's going on, trade geniuses? This is Philip. We've covered in the past how volatility affects binary premiums. And one thing I wanted to go over in this video was also how VIX relates to other volatility indexes, specifically Forex related volatility indexes. So let me explain to you what we have up here. It's a 2-year chart, daily chart. Candle bars are the regular VIX volatility index. This purple line represents the Euro USD volatility index, and these are all provided by the CBOE. This blue line is the yen index VIX, and this salmon colored line is the British pound. So as I've said before, once we get down this line here, this horizontal line represents the 13 level on VIX. And once that gets breached, we see typically the in-the-money premiums on binary options tend to dry up. So you'll see hourly contracts, as you step away from where price is currently trading at, premium will die off rather quickly. On the daily contracts, you'll see premium die off earlier in the day, and so on and so forth. Above 13, you get, the risk reward is such that you have more opportunities to get into a trade. Nadex would like to see VIX above 13. Why? Because it creates more volume. Nadex is an exchange. Now, they're regulated, so they're not the market makers. And the market makers do have an agreement with Nadex to provide a market. However, Nadex can't dictate to them, how they're pricing in volatility with their volatility algorithms. So, that being said, when we get into conditions where we're under 13 for VIX, Nadex, their volume is going to drop. So the other thing I wanted to point out, though, is that now that we have these overlays of these other volatility indexes, we can look at where we have divergences. And this is actually makes the problem even worse, because now not only do you not have premium, but you've got volatility that is comparable to this area here, which, as you can see, we'll be able to get into trades. So the danger with this, and if you're just trading binary options or new to binary options, is that you're going to be looking at, say you don't want to get anything less than $20 premium. Well, the problem here is that you're going to be getting into trades that are going to get really close to price, and with this kind of volatility being divergent from regular VIX, so this is the yen and the pound volatility, chances are higher that you're going to get run over. So our service takes that into account. It looks at where VIX is at, it sees the premium. So when the probabilities get sent out, the signal that we send out takes these things into consideration. So anyway, I wanted to share that with you. I know Nadex, they may not ever admit it, but they would much rather have VIX above 13 and preferably up here in the 20s. But that's something they can't dictate. So the market makers are the ones controlling that aspect of it. I think the better approach would be for the market makers to price the different Forex pairs according to their own volatility index. So pound and yen, for example, would have better premium tomorrow than, say, the euro dollar cross. But that's not the way they're doing it currently right now, and I would venture to guess much to the chagrin of Nadex. So anyway, that's our observation on it, and I thought I would pass that along to you guys, and primarily just to show you guys that it's a really risky environment when we have this type of divergence between the Forex volatility indexes and the actual VIX itself. Alright guys, that's it for this video. If you got any questions or comments, leave them below. If you're interested in our binary option service, click the link below the video and you'll be taken to our website where you can check out what we offer. Alright guys, we're looking forward to some more trades this week, and I will be out with another video kind of taking a look at the week coming up. Until then, take care. Bye bye.